Well, g'day there everybody. This is just a continuation, leaving off from the previous video's analysis where we looked at 15 or so individual trades. This is the next 10, or what we like to say is the second watch list. It is titled technology. The majority of this list is technology, but there are a couple of outliers in here which really don't fit into that sector, but it doesn't really matter. It is a price chart. And if we have a price chart, we can trade that individual chart. So what we'll do, we'll start with eBay. And then we'll move our way down and we'll finish with Zinger Technologies down here. So what we do with eBay anyway, is we'll talk about the potential retest of this old resistance level. Let me just bring up the right chart for you. You can see that we've been in some form of a sideways consolidation for the better part of a year or two. And we broke out above it. And since then we've been failing. Now we got down to this $55 level and we were saying to ourselves, well, this is a really good opportunity for eBay to bounce, retest that old resistance level and bounce and continue higher. So we set this trade up at 56.35, did not trigger. Instead, it looks to be continuing bearish. The only thing holding eBay up at the moment is really that 100 and that 200 simple moving average. So really the trade opportunity is off the bounce of the 100 and 200 or the failure of the 100 or the 200. So at the moment, I can bring this down even lower. And that's what I will do. I'll say that if we get above 55.71, I'm trading bullish on eBay. If we get below 53.48, I'm trading bearish down to $52. So that's eBay in a nutshell for you. Facebook has been incredible. Shared a trade. We caught the breakdown of this double top a few weeks ago. And now we're just breaking down below that 100 right now at 57.50. This has got a long way to go. We've got 53.90 as our next target, and then we've got the 200 after that. So Facebook is quite bearish leading into this week's trading session. Guild, you can see the two targets or the two triggers here. We're quite away from both. We're in the middle, but these are definitely the best opportunities to either buy long or to sell short. Anything in between those, I'm just waiting and just hanging out for. Here's IRM. IRM, I'm really expecting some form of a break, either higher or lower. Much like this. I mean, it wouldn't surprise me if we get another move like this leading into April and May. I mean, sometime it has to occur. Maybe it's earnings which is going to do it. But you can see if I just bring up the Bollinger Bands, the volatility is so low in this stock and it's just moving sideways. It's as if it's dead. But it will pop and it will come back to life. It's just a matter of time. So these are the two triggers in green. Let's move on to MA. MA, very, very close to triggering. Very close to breaking down. We've got all sorts of bearish signals. We're breaking fan lines. We're breaking support levels. I mean, there's just nothing holding this up once we break 71.38. So if you're looking at MA, if you're following MasterCard, hold on to your hats. This could be a wild ride lower. All right, it's definitely something to keep on your radar. MU, again, a huge rejection at that resistance level. Huge rejection. Thing is, the risk reward from 21 down to support is quite low. It is a high probability trade. So just pay attention to that. It looks good though on the bearish side. TSLA, again, very good on the bearish side. We do have that structure now to work with. So what I'll do, I'll break down this bearish entry down to about $201 a share. That is the bearish entry on Tesla. Twitter, looking good. It's just continuing bearish. Look at all these trade setups which we've had on these stocks, which are just moving in our favor really, really nicely. Twitter's another one. Earnings is coming up, so don't force the trade. Just stay out of Twitter for this week, and then we'll set the trade up next week after earnings is announced. Here's Yahoo. Here's another share which appears to be breaking down. 34.19 was the bearish trigger. I mean, this is absolutely tanking, down $1.50 on Friday on good volume. Check out that volume coming in. We've just got one support level. If that doesn't hold, then we're trading down to $32 a share. All right, now that's almost a given. Let me just have a look where the simples are. And the thing is, we've got that 200-day, which is an absolute stinker. So what I'd like to see is a couple of inside days and then that really defined support break. And to finish with his Zinger, Zinger's at the bottom of the open window at our target, $4.11 from the $4.65 entry. Really nice trade setup. That's Zinger. I mean, the trade's done. I'm not forcing this. It's gone a long way. We're at the bottom of an open window. Support level. Everything's well and good. So just forget about Zinger this week. We'll trade it next week. Now, all the best, everyone. If you want to learn how to do this for yourself, have a look at pivotpoint-trading.com. Sign up for a free scholarship, and it'll get you on your way to successful and autonomous, profitable trading. So all the best, everyone. Have a fantastic week ahead. Goodbye.